Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues on the day straight, starting with the benchmark index moves to the sectoral action and all the stocks that are buzzing the most in trade. Also, after the sharp downward reaction on the IT pack yesterday with the disappointing numbers of Infosys and the downgrades coming through, how should you be really strategizing your moves on the IT pack, and which are the sectors and stocks that are looking appealing to experts as of now? We'll discuss all of that in this show itself, but first up, a quick check as to how the benchmarks are moving in trade. Looks like a slightly lackluster trading session after yesterday's fall. You're looking at 17,690, just about a 15-point loss for the Nifty, absolutely flat with the negative bias. Look at the Sensex as well, just about a 55 point of a cut for that one as well today, a 0.1% of a fall, and 59,853 is the level at which the Sensex is moving in trade as well. In terms of the top losers in trade, you do have some of the big wigs like Reliance Industries, looking at some cuts coming through. Bajaj Auto, Titan, Apollo Hospitals, Power Grid. Some of these stocks are, declining by about 1.5 to 2.5% in trade. It's a mixed bag sector, different stocks from different sectors as of now. The stocks that are seeing recovering in trade today, HCL Technologies is slightly up in trade. You're looking at IndusInd Bank, Dr. Reddy's, Coal India, Nestle Industries also up in trade as well. At this point in time, again, a very mixed bag when you see no clear direction of a particular sector really taking shape or taking the markets higher in trade today. In terms of the other sectoral moves, you will be able to spot slight gains coming through in the banking space. The Nifty Bank up by 0.3%, with both PSUs, private banks and financial services, all of them supporting the up move. Autos slightly moving in the higher trading zone as well. Pharma up in trade by 0.5% as well. The Realty Pack extending its gains as well, 1.5% for that one too. What's not doing well is slight declines coming in on the FMCG pack and the media stocks that are slightly lower in trade, but rest of them are looking slightly up in trade, although not very sharp gains on the upside, but just moving along the flat line, and slight gains is what we can see. Time now to welcome our guest on the show. Mr. Vinit Bolinjkar joins in. He's the head of research at Ventura Securities. Vinit, welcome to the show and thank you so much for taking the time out for this discussion. I wanted to begin by understanding your own sense on the entire IT sector first. I mean, we've been seeing the way the results have been coming through the last week, and then the reaction in the stock markets as well. Of course, the intraday move of 10-12 odd% on Infosys that we saw yesterday after the dismal quarterly performance and the earnings downgrades by most of the brokerage houses. What is your own sense of the kind of earnings that have come about? How have you read through them and the reaction that you've seen on the markets?
So, Sakshi, to be very honest, we were quite guarded in our view as we went into the earnings season with IT stocks. And I've spelled these things out to you in our earlier show also.
Yeah.
And more than that, I think Infosys belied even our worst expectations by reporting an earnings degrowth. So that is going to be the sign of things to come in the IT stocks over the next 3 to 4 quarters. Given that, multiple issues that I'm reiterating for the benefit of our viewers is that, the financial crisis which has hit the SVB bank is going to spill over and impact all the other regional banks because they do not have the wherewithal to defend themselves against rising interest rates in the money market funds, where the deposits are moving out into money market funds and banks don't have the room to increase the rates. So they are going to be caught in a very rough spot. They will have to be resort to FDIC as a backstock, and they're going to take a hit. Possibly these banks would be merged with the larger banks, and until such time as they get a healthy recovery in sight, earnings spent from these banks is going to be a concern. More than this, if you talk of the general US market, we are having the dollar dip, which is hitting the earnings of Indian banks. Apart from this, there is a recession playing out with high inflation, and if you combine all this with the slowdown impacting the high tech space, retail, and the other sectors where Indian IT service companies have their clientele, I think it does not look too good. And for the next 3 to 4 quarters, we would advise investors to stay away from all the IT space.
Okay, that's what exactly I wanted to understand from you, that if this is just a one-off quarter pertaining to one company, that is Infosys, which has seen such a big downtick, or do you see a more structural issue in the entire IT sector? Are we likely to see some more downgrades happening across the board for this quarter and for the coming quarters as well? And among the basket of IT stocks, which are the most susceptible to the slowdown and which are likely to weather the storm better?
So, I think the companies which are having a bulk of their services business oriented towards the US markets are going to be in for a rough time. And, that goes without exception. But we would like to be invested in companies which have a more of a productized portfolio than a general services business, right? Which can somewhat weather the storm. Currently, we are absolutely underweight on the entire sector without exception,
Okay.
and continue to have a guarded view at least for the bare minimum 2 quarters, if not longer.
Okay, and we are just awaiting Wipro, Tech Mahindra, HCL Technologies. How does one really look at these IT stocks ahead of the numbers? Is there any kind of position should one take or completely avoid?
Uh, I think daredevils can look to take opportunity of shorting them with tight stop losses. But apart from that, as investors, I would advise you to do book profit, move into more domestic businesses which have got a lesser European or a US focus, and you know keep generating the alpha rather than being stuck with IT stocks.
Okay, one more question before I move on from the IT pack to the other stocks or sectors as well. 10-12% of an intraday fall is what we saw on Infosys. When exactly do you really look at these stocks as an attractive buy? If not this kind of an intraday move, what will it take for you to have a constructive view on IT space?
No, I I would look for their commentary. I would look for their commentary wherein they come and talk about things turning around and them getting back onto the growth path. So unless and until these companies do not announce a growth path and a path to recovery, I would not want to venture into these stocks because I believe that the Chat GPT moment is just happened on us, and there's a lot of automation which is going to disrupt many industries, and until and unless you can move away from having exposure to you know the labor arbitrage kind of business, I think we'll have to wait for that to pan out.
Okay. If not the IT pack, where exactly are you bullish on amid the earnings season? Are there any particular sectors, stocks that is on your watch list as well?
We like the Indian auto space. Uh, we have spoken about Tata Motors with you earlier, and today
Yeah.
we've just gone and released our bullish view on Eicher Motors.
Okay.
We believe that there is a 33 to 34% upside, and our positivity stems from the fact that the company is well on way to launch 28 new models over the next 5 years. They've launched three, and the space in which they operate, 200 to 250 to 800 cc, in that there's not too much of competition. If at all there was any presence, the players have dropped out, and Aisha remains the last man standing out here. And there is a sense of premiumization playing out, because at the entry level, uh, there's a slow mo happening, and all this traffic is moving out to the mid premium segment, as we call it. And then we believe Aisha Motors has the best chance of making it big. Uh, so, not only is the market underpenetrated for Aisha in their domestic space, so, they were primarily a South and a West brand, and now they've forayed into the northern markets, improved their distribution. Internationally, to, from 10, 12 locations, they have moved to 190 plus locations, globally touch points that they have. And with their wide offering that is there, I believe that this is one stock which can really do well in the Royal Enfield space. And even if you look at their portfolio in the CV business, they are well marked to be in the mid range. So they participate in the 3.5 plus category. Primarily, the sweet spot is about 6 to 7 tons vehicles and upward. And in this space, if you notice, the CVs are obviously doing well, and the CV cycle will play out for another 2 years. Especially in the MNHCV cycle, we think that the maturity could come somewhere in 25, 26 in the growth phase. However, the mid and the small will continue to grow, and iShares will continue to dominate this space. And if you compare iShares with Ashok Leyland and uh, Tata Motors, it has been gaining market share in the CV space, as well as the EBITDA margins they make with respect to per truck is far superior to the other two players. So we believe that double-digit growth in earnings uh, is compounded is easy for the stock, and we think that we have a 30 to 35% upside on this stock from the current levels.
Okay, Aisha Motors from the auto space, 32 to 35% kind of an upside is what one can bet on, and the kind of structural growth that can support this movement on the upside for Aisha Motors. Avoid on IT, but a buy on the auto stocks is what Vinit has, recommended on the show. Thank you very much, Mr. Bolinjkar, for being on the show and discussing these insights with all our viewers as well. We'll continue to take more insights on the markets going forward also from you. Right now, as we speak, subdued trade on the markets continues. 50 points of a cut for the Sensex, about 10 odd points of a loss for the Nifty as well, slightly below that 17,700 mark. But we'll continue to watch this space, especially in the second half of trading action. Is there any kind of a pullback and any kind of space that can actually lead the kind of recovery on the markets and get the markets back on the growth path again is something that we will continue to watch out for. Be with us on Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. That's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.
And that's the sort of welcome you get at the Apple Store in BKC. Let me take you inside to give you